Benchmarks. When evaluating the performance of an investment fund or strategy, we need to use an appropriate benchmark. For example, if you own a mutual fund that invests in Canadian stocks and the fund was up 5% for the year, is that good? A positive return is always nice, but what if the Canadian stock market as a whole was up 8% for the year? Now it might not look as nice. Benchmarks allow us to evaluate the performance of our investments in a more meaningful way. Indexes are often used as benchmarks. For example, the S&P TSX Composite Index, often called simply the TSX for short, is commonly used as the benchmark for Canadian stock funds or strategies. If the index is up 8%, then the performance of your Canadian stock mutual fund or your collection of individual Canadian stocks you hold in your portfolio might be compared to this 8% number. If your Canadian stock investments return 10%, then you beat the benchmark by 2%. If your Canadian stock investments return 4%, then you underperform the benchmark in this case. What if the index was down by 5% for the year? If your Canadian stock investments were down by 2% for the year, while it was a loss, you still outperformed the benchmark. One of the most important aspects of benchmarking is picking the proper benchmark. For example, let's say you invest in a mutual fund that invests in small cap Canadian stocks. That means the manager is only looking at investing in smaller Canadian companies. The appropriate benchmark here would not be the overall Canadian stock market, but rather you could choose a Canadian small cap index. Or what if you only invest in Canadian dividend-paying stocks? There are indexes that track only the performance of Canadian dividend-paying stocks that you might choose. But let's suppose that you have a balanced fund, one that invests 65% of the fund in Canadian stocks in general and 35% in Canadian bonds in general. You can create a custom-weighted average benchmark with some simple math. Let's say your balanced fund returned 3% for the year. The Canadian stock index returned 5%, and the overall Canadian bond index returned 2%. To create a custom benchmark in this case, you simply take the weighting of the asset classes in the fund, in this case 65% for Canadian stocks and 35% for Canadian bonds, and you multiply each by the return of those individual benchmarks, in this case 5% for the stock index and 2% for the bond index, and then you add them up. 65% times 5% is 3.25%, and 35% times 2% is 0.7%. Added together, we get 3.95%. Since our balanced fund had a return of 3%, that means we underperformed our custom benchmark by 0.95% for that year. It's important to note that if an investment grossly outperforms or underperforms a benchmark over a one-year time frame, that may not be enough information to warrant making changes to your portfolio just yet, but you may want to put those strategies under review. Consistent underperformance over long periods of time lowers your long-term wealth potential.